Look, last 6 months, the momentum for NVIDIA is basically flat. You score it a 0. That's what it is. You pull the lens back over the last 12 months on a scale of 1 to 10, it still scores as an 8. So
that's because the marginal buyer's already in there as well. You can make that argument.
Whatever the argument might be, that is the actual momentum score. In the near term, to your point, the 20-day, I'd call it a -2 at this point. So in reality, what's going on? You have heavy speculation over the last month. You have the options market driving the actual stock price. There has really not been very much in terms of a fundamental deterioration been reported in any of the earnings reports over the last 8 quarters. At the end of February, you'll hear the next report. Could the stock move lower from here? Without question, it can. I think it's right now in a range where it's basically $10 up, $10 down. And keep your eye on the options market, because that's going to tell you the direction they're going to try and pin it.
By the way, last week, Shan, there was a story out that suggested because of the stock's decline, which has certainly outpaced to the downside any of the other mega caps, people are going to wake up in 2025 and realize that they were accidentally underweight the stock because it's gone down a bunch, which is going to lead to loading up yet again to get to the right size of position.
Well, I think we continue to focus on this idea of concentration and risk mitigation in your portfolio. We've talked a lot about portfolio construction over the last few months as it relates to this stock in particular. I think that you go back to early August on NVIDIA, Scott, and you saw really an interesting opportunity if you weren't in the stock at that time to be able to add to it. I would agree with you. I think what people are going to be looking at is this a position that I want to make sure that I have my full weight in? And if so, do you add to it, or do you do what we've been seeing, which is adding some of these other semi-names, looking for that next wave? We've seen what Broadcom has done more recently. So I guess the question is, do you want to move your position higher based on that math, or do you want to actually take this as an opportunity to get some more diversification in the semis, given the pressure that some of them have been under?
You look at the performance of Broadcom versus NVIDIA since last Friday, and you're going to see a tale of two stocks. And the chart line is going to tell a very distinct story, what's happened of late to both of those names. Broadcom has been out of control. Look at that, up 29% since last Friday relative to NVIDIA. Broadcom's helped the SMH, by the way. The SMH, the semis, are having their best month since June after doing nothing, Bill.
Yeah, Broadcom's had good news. They've had an earnings beat. They've leaned into their infrastructure development. But look at NVIDIA's move here today. It's responding of this Jetson Orion developer kit that was announced at half a cost. Now you get news. The market's responding to news. Broadcom, I think, was undervalued at the time. And this multiple extrapolation we've seen in Broadcom, I think, is something that can't go unnoticed. But it's also why I'm on the move with this. I'm letting Broadcom run, and I'm kind of managing the overall semiconductor.
Well, you're trimming micro.
In an era marked by rapid advancements and relentless innovation, the stock market serves as an ever-watchful barometer, reflecting the pace of technological evolution and economic vitality. It is the arena where fortune meets foresight, keeping a finger on the pulse of groundbreaking shifts. Yet, what transpires when the titans of tech, the very giants who have been the vanguard of this evolution, start signaling a potential slowdown? As you hold onto your portfolios, whispers waft from the corridors of Wall Street, hinting that industry behemoths like Nvidia Corp, Meta Platforms, Google, and Microsoft may be easing off the throttle on their artificial intelligence investments. This scenario poses a compelling conundrum. Could this spell a turning point with consequential ripples across the semiconductor sector, or is it merely a fleeting hiccup in the long-running cyclical dance of the tech world? As speculation and analysis intensify, industry stalwarts such as Doug Lefevre from Advantest and Jamie Dimon from JP Morgan Chase offer critical insights into the emerging landscape and its broad-spectrum consequences. Welcome back, everyone, to Investocracy.
Listen, it has nothing to do with me disliking NVIDIA. It did trigger some levels that worried us. But I want to remind you that the last time we bought NVIDIA was at $100, and last time we sold it was before it fell to 100 at this level. It's really portfolio management here. It triggered that sell, and ultimately, with the move in Broadcom that we've had, we own more chips than we did, say, a week ago. So it's not about us disliking NVIDIA. It's managing the position. It's still a 5% position in our portfolio, and in our concentrated portfolio where we own no more than 10 names, it's 9 to 10%. I still want this thing to go higher, and I think it can.
Okay, so you watch the technicals, and you just alluded to it when you talked about breaking some levels. The Barron's article that I read today, I thought the commentary about the stock was pretty interesting. 135 is the level to watch. It's sitting right there. It had broken below that. It was back above it today. It's sitting right about there. Keep your eye on it. It's a 3.5% gain now. It's sitting right below 135. It's below its 20-day, which gives a good read in near-term momentum. The 200-day is 115, which the commentary today suggested that it's not going to go below that. And if it goes down to that, you're still talking at a stock that's 27 times its forward earnings, the low end of the range from when this whole thing started. But you are watching the technicals closely.
At the forefront of this unfolding narrative is Doug Lefevre, CEO of Advantest, whose recent revelations underscore the potential ramifications of slackened AI spending by formidable tech firms. The concern is palpable. The semiconductor industry sits on a precipice. Giant corporations, notably Nvidia, have dedicated substantial capital to constructing sophisticated data centers reliant on state-of-the-art semiconductor technology, a market whose value can be measured in microchips, each as precious as a fragment of silicate gold. Lefevre warns of an impending, vicious downturn should investments recede, likening the complexity of the problem to the intricate pathways etched on a semiconductor chip, dizzyingly convoluted, yet undeniably fascinating. For the average investor, this poses an existential question. What does this paradigm shift mean for those hedging their financial stakes on AI-powered stocks? Think of AI investments as the heart's rhythmic beats. In this metaphor, semiconductors become the coursing lifeblood. Without the heart's steadfast beats, the lifeblood risks stagnation. Yet Lefevre casts a hopeful glow on the horizon, particularly in the burgeoning realm of smartphones, suggesting a surge in demand fueled by emerging advancements. Envision your smartphone transcending its role as a mere communication tool, evolving into a hyper-intelligent AI assistant capable of predicting stock market trends. Imagine the irony and jest in AI predicting increased investments in itself, a paradox amusing both analysts and laypeople alike. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yeah, 130 to 135, that's sort of that balance area. We start closing, especially on a weekly basis. The last thing I wanted to see is a negative move in the market broadly post-Fed. We closed the week at 127 in Nvidia, and I think the technicals become broken. If we finish the week back above 135, I'm very excited. Now, we put every single ounce of cash to work over the last 45 days, and we leaned into big tech. This is us just getting a little bit of cash to keep some flexibility.
Okay, Weiss, you own it too.
I do.
Big event looming that I was reading about today that I didn't even know was happening, and I think it's worth mentioning for sure. Jensen Huang speaking at CES on January the 6th, so not that far from now. You really want to get all bared up ahead of, the leather jacket on the stage? Really?
Well, look, I think Jensen Huang's, his speeches have had basically decreasing impact on shares. They may pop it for a moment after the speech, but you can guess what he's going to say. He's going to talk about its strength has never been more apparent than it is now.
The last time he's done, I don't know about this, Weiss. The last couple of times he's done this, he made the rounds in New York not that time ago. Stock took off. He spoke at the Goldman Communicopia conference that I was at, and he talked about demand being, I forgot the word that he used, but basically was suggesting it's unbelievable. And the stock was up after that event quite substantially, too. He has had a unique ability to move the stock.
The crescendo of complexity and escalating costs of semiconductor chips have strategically fortified companies like Advantest, catapulting them to positions of formidable influence. Their soaring stock prices, a testament to insatiable demand for high-end chip testing apparatus, narrate a story of opportunities harnessed and markets consolidated. Concurrently, Logan Weaver, CEO of Surmount AI, along with fellow advocates such as Jamie Dimon of JP Morgan, championed the transformative potential of AI. Dimon posits that AI transcends ephemeral trends. It is intricately woven into the fabric of our daily lives, impacting everything from investment strategies to mundane functionalities. According to these visionaries, the dynamic shifts within the industry reaffirm AI's indispensable role in underpinning modern economic realities. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So if you talk from a trading move, you can play it. The shares aren't going to trade down after he speaks unless it moves up markedly into January 6th in expectation of his speech. My point is that if you own the stock, that it's going to have a negligible impact on it because, as you see, the stock's traded down since those events. So that's not a reason to buy it. Look, I grapple with this because given what they charge for their chips, and given the pocketbook that Meta, Microsoft, Google, et cetera, all have, and how they're all targeting the manufacturing of their own chips, by the way, using the same fabs that Jensen Huang uses, which is largely Taiwan Semi, you know, there's a big incentive there. It's not like they have to build their own fabs to produce these chips. All they have to do is find capacity elsewhere, and they build a competitive chip.
They're not really doing that. I mean,
they are doing that.
No. According to a technology consultancy firm called OMDIA, Microsoft acquires twice as many NVIDIA AI chips as the tech rivals. That is according to today's Financial Times. Microsoft bought 485,000 of NVIDIA's Hopper chips this year. That put Microsoft far ahead of NVIDIA's next biggest U.S. customer, which is Meta, which bought about half that amount.
As the anticipation regarding potential reductions in AI investments by technological behemoths builds, it becomes increasingly crucial to understand the potential shockwaves these decisions could generate within the semiconductor domain. Yet amidst uncertainty lurks opportunity. For astute observers scanning the technological horizon, semiconductor stocks present a compelling proposition, buoyed by their unwavering connection to AI progressions. The current market environment, characterized by mounting demand for sophisticated chips, indicates that companies like Advantest possess the resilience and endurance necessary to thrive, provided innovation continues apace. Looking ahead, forecasts suggest a resurgence of demand, driven by imminent breakthroughs in AI applications. The cyclical nature of this industry suggests that downturns might eventually give way to resounding upturns. As investors deliberate their next strategic moves, the pressing question is, are you meticulously tracking these seismic shifts, or might you seize this whirlwind moment for potential profit? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.